Hey everyone, it's Evan here from the Trade Risk on Wednesday, November 8th, here with a midweek market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. 2 points here before we jump into today's video. Number one, there will be no weekend video on Friday this week. I am traveling and won't have any time to produce that video. So if you're looking for it, won't be going out this Friday. We'll sort of resume our schedule next week. And along those same lines, I'm thinking of moving the midweek videos to Tuesdays and then sticking with the Friday on the weekend edition. I think that gives a more separation. Find myself on Fridays with a lot less sort of things and insights to say because it's Wednesday evening, not a whole lot changes between Thursday and Friday. I know we're in a very dull market right now, so that doesn't certainly help the cause for sort of changes or volatility or structures to actually change in these charts. But I think Tuesday, Friday, you kind of get that weekend that the markets are closed. Lots of news kind of comes out and you get that new sort of energy that starts the new week. So I think Tuesday, Friday might be a better lineup. In any case, if you subscribe to our YouTube channel, that'll keep you up to date. That'll tell you when we're actually posting and have published a new video. So make sure you do that. But keep an eye on those. It may actually change from Wednesday if you're used to watching them on Wednesdays to Tuesday. So I think that's it. So let's jump into charts here with the S&P 500 SPY ETF. And you can see here, we closed up 44 cents here on Wednesday, which isn't a whole lot, but it's enough for a new all-time closing high in the SPY ETF. And basically, if we look at this week's action, not a whole lot has changed. This was Monday's session right here. You can see we finished up 40 cents, pulled back just a little bit yesterday on Tuesday here, and then made new sort of gains here on the week, or at least closing on the week at new higher prices on Wednesday. So if we look at this weekly chart here of the S&P 500, the SPY ETF, you can see we are once again at all-time highs here on a weekly basis, and we are continuing to sort of trek higher here. Notice it is slowing down, right? It's certainly a grind. That's nothing new, but every sort of week that goes by, we are, just kind of crawling up $1 or so here in the SPY. So volatility is low and we're just kind of cruising higher, but respecting all uptrends. The trend is still very much strong here when you look at those longer term time frames. Back on the daily chart, again, we're above a rising 8 period and a rising 20 period moving average. So nothing to really complain about here from the landscape. The trend is still up and to the right, and we are making those new highs. Volume is a little light, but it's basically in line with what we should expect. So not a whole lot to say about the S&P 500. It's continuing to sort of just move along higher here. I think the more interesting index is the IWM, the Russell 2000. We actually got long it today. So let's talk about what happened here with the Russell 2000. So yesterday was an interesting day, and this was a loud day for the Russell, where we ended up breaking below this level here, which held 3 times over, represented by these little arrows that you see drawn on the chart here. But we came down and kind of slammed into this 147.50 level over the past 2 weeks or so, and buyers stepped in and supported us until yesterday, where we kind of slammed down through that level and closed below it for the first time, basically since October, really September. No, let's see. Yeah, the end of September was the last time we sort of got down to these levels. So we did get follow through off of this move lower yesterday, intraday here today, got all the way down to 145.80, which I believe was down over 1% here at the lows of today's session. But notice we did stage a pretty good looking reversal here. We moved back into positive territory, up 23 cents on the day. So we got long it for a reversal setup here, and I'm very much more interested in this weekly time frame now. We had this really strong move higher throughout September, and then we spent the last 5 or so weeks consolidating, pulling back, moving very slowly, and sort of working off those conditions. So as I look at sort of today's action here, while I certainly don't like the fact that we just kind of pushed through these lows here, I do sort of value the reversal that we saw here today. I'm looking at the uptick in volume here over the past 2 sessions, thinking that this might represent a, kind of shaking out the final week longs here. And I'm willing to give this a little room. I'm not crimping up very tight against this. I'm willing to let this kind of come back down and dance around or carve it, take some time at these levels, so to see if we can eventually start to bottom out and lift higher. So we do have a long position here in the Russell 2000 small caps, and we are giving it a little bit of room here. I think down around this 144 or so level. That's the way we're playing it. It's a single trade, not an all-in thing. It's one trade in the bucket, so do keep that in mind if you are looking to sort of participate in this or not. So that's sort of the setup that I'm looking at here. You can see this trend line. I'm not, the setup doesn't really, that we're looking at doesn't really, this trend line does not play a role in it. This is simply still drawn here from the upper end of this channel that we're in basically all year long. You can see it did, reverse at it, coincidence or not. That's not necessarily the reason that we're in it, but you can see how that confluence kind of comes in right around here. And it was almost sort of retesting this area here. This is kind of the expansion day when we really kind of ignited higher back in the end of September 927 when we rallied up 2% here in the Russell. I think that was sort of the kind of the breakout level. I know you could use other levels or think of it in a different way, but you could see that kind of retest, and we saw the reaction today. So we'll see how we finish off the week. Again, IWM has been lagging recently, but when we look at this market overall, when we're trying to figure out where can we look for exposure, we look at something like the Qs now, which is really just kind of accelerating higher into the stratosphere, and we've seen all of the indices kind of do that, right? The Russell really kind of extended higher way at the beginning of September. Then we had the S&P 500 that really extended higher. Then we had the Dow that was really kind of pushed higher, and now we have the Qs. So you can see how this rotation game is just playing amongst some of the major indices here, and that even takes more acute sort of shape in the sectors. But the Qs now are really sort of running away from all of the long-term or faster moving averages even on the weekly chart. On the 8 and 20 period here on the weekly, you can see just how far extended we are. If we go down to the daily chart, you can see we've just been cruising higher ever since this gap and go day off of sort of the major company reporting earnings on Friday with Amazon, I think Google and Microsoft all in that one day, and that really just has fueled this acceleration higher to the upside. But when we're looking at this market and trying to say, okay, where can we get exposure that's maybe has a little better of a risk-adjusted basis, it's tough to jump onto the Qs in general here on some of these names, whereas we look at something like the IWM, it's consolidated, the long-term structure is still intact. I think you find sort of the rationale of how we can sort of put a foot into the door here to get some exposure in this market with perhaps a little bit lower risk, and see if we can continue to sort of play the rotation game where maybe the small caps are the next step. So that's sort of the market environment as a whole. I think there's still plenty to like here. There are some minor divergences here and there, but the trend remains higher. We continue to sort of just play this game of rotation and continue higher. So I think you need to respect it and participate and make sure you're adjusting and keeping those stops in place, managing your risk, so on and so forth. So that's the market environment. Let's jump into some other major markets here. We'll go to TLT next, which finally had a red close today. It's been on fire over the past 2 weeks or so. It's already up 57 bips here on the week. It's above last week's highs, and it's clearing above this 126 level, which we did outline here as a pretty good inflection point over the past several months. You can see we are above that, and we've gone as straight of a line higher as we could imagine over the past 2 or so weeks. So trend has quickly reversed to the upside here over the short term. You could argue that on the weekly time frame here, we're still pretty flat and messy, all things considered. But you got to respect that short-term trend for now. Keep an eye on this 126 level or so. If we were to quickly lose these highs here, right around 126, the highs from October, maybe this is some type of false, little excitement here to the upside in TLT. But I certainly wouldn't want to be really playing around with this too much right now. I'd rather just be a spectator and watching how this unfolds. So TLT, got to respect some of that recent movement there. If we go to oil next, again, continued to be on fire here over the past couple of weeks. It had a pretty loud day this this session here. It was down 70 basis points. You could see it did rally intraday to new highs here, and it did reverse on some significant volume. So USO is a bit interesting here on this 1150 area. You can see it's had just a remarkable run from $10 to 1150 in about a month or so. So it's had a great run. The short-term trend is higher. We did get some good volume coming in today on the short-term sort of price action reversal signal. Maybe this starts to a little bit more of a pullback or consolidation, but still, again, I think you got to be very tactical if you're looking to fight it. And again, respect the trend, respect the ground that we just covered, because momentum is still kind of leaning and pulling us up and to the right there in USO. If we go to natural gas, a very sort of, again, a sharp move over the past week or so. We were breaking to new lows here, making new lows on the year below $6, and look how fast we sort of reversed from that level and just V-shaped higher, breaking us back above this 620 level, which were sort of this lows here from August and then the lows here from early October. We gapped above it and we just continued to push higher, and you can see there's a lot of supply right in here around $6.50. That makes sense. That market is sort of reversing, or at least pausing a bit here as it comes back into this heavy supply area, but don't sort of don't discount the fact that a lot of people could have gotten washed out down here. Volume wasn't tremendous. It did certainly uptick here early this week on Monday on this day, on this 4% move higher to start the week. But I do think that this could have capitulated a good amount of people down here as this made new lows, and as it quickly reclaimed support. That's always something I look for as as potential opportunity. And I would look to see if this general area here, I'd like to see 620 just hold, not even come back down and retest it even further than that. That would be the ideal sort of bullish momentum kind of false breakdown scenario. So let's see if that happens. I'm no position right now, but I'm watching it. The weekly chart, the longer term chart's still a little rough here in UNG, but again, I think it's something to respect, this recent action that we saw here of a kind of a washout below that $6 level. So that is actually, no, the metals. Let's take a look at gold. Right, so gold is starting to try and hold in here right around this 120 level. If we go to the weekly chart, you can see it's been really tight kind of trading over the past 2.5 weeks or so in between this 120 and 122 level. And that really does coincide, or more or less coincides, with this October low here, this reversal that we saw back to start off the month of October. That was a low. We bounced higher and then we came back down, and we're trying to put in a higher low here. So we're trying to sort of double bottom or put in that higher low here in GLD, something to pay attention to and something we're trying to work out of. The moving averages really aren't that favorably aligned right now, so you got to be a little bit cautious there, but it looks like the gold bulls are trying to step in and move this higher. If we start to get back above this 122 level, I think GLD actually looks good for a bit of an upside trade. And silver, which is actually a position that we are in now as well on the long side, is something that, again, very similar to gold. We had this outside sort of reversal, this low that got put in at the beginning of October. We saw the bounce higher, and then we pulled back and sort of retested it, put in a slightly higher low, and now you can see a bit of a messy sort of confusion here over the past several days, but it's trying to battle it out right in here around this $16 level. So we got involved in it on Monday on this nice expansion day higher. This was a reversal day. I was looking at this very ugly day on Friday of last week as it fell down 1.5%. But I really like the session that it put in on Monday, up 2%, reversing all this action, closing here at the highs. I was looking for that immediate follow through. We didn't get it. In fact, we got kind of an ugly inside day, and then we got a not so pretty looking Wednesday sort of follow up to it. So it's in a tough spot right now. I do have a long position here, giving it some room, basically trading against, say, this general area right in here around this 1570 level. If it starts to break down below here, I'll be out of it, but we're going to see if this can hold in, if this can battle it out, if the bulls can step in and break us above 16.25 or so. I think we're in good shape here for SLV, but it still has some more work to prove. I'm very interested to see how it closes out the week. So that's silver, that's gold. I think that's all the major markets. Let's look at some sector analysis here. is we do have some kind of changing of the guards. We'll start with things that are still working, and these have been working for a while. It's technology, which, look at this candle here, beautiful. Again, just rally to new highs. At some point, this, the music will stop, but it's very hard to predict ahead of time, and I think using something like some simple moving average and trend lines are our best bet. And as of right now, there's not a whole lot else to say except for this trend is still very strong and up and to the right. So that's XLK, continues to lead. Semiconductors goes hand in hand, continues to lead, kind of moving sideways a bit here over the past 3 days. Light volume today and yesterday, but still very, very strong trend here in the semiconductors, and that continues to be the case. XLU is actually continuing to move higher and actually breaking out here to new closing highs. Not quite, almost. Tried to today and then just pulled off just a little bit, but kind of a stealth, very choppy action here, but it is working itself higher, and utilities are starting to break out. If we look at this weekly chart here, you can see on the weekly basis, if we close where we are, it's a new weekly closing high here. So something to pay attention to. The XLU, that's a safety kind of defensive area, and maybe that speaks to the TLT rally we saw, and then the financials, which are in our bottom grouping sectors, which we'll talk about in a moment. But XLU continues to be resilient here. XLE, energy, broke through with some authority to start off this week. This resistance in here right around 68.75. It's pulled back between yesterday and today, but it had a beautiful start to the week on Monday, and that continues to work itself higher. So energy, I still like it here. Looks like we kind of just put in a higher low in here, and we're ready to sort of leg higher again in the energy ETF. So I like that space, along with healthcare, which we talked about in last weekend's video. We said, look, this is the day we looked at it on Friday. This reversal here at the lows from September, that could be a good kind of spot for XLV to find some support, to bounce and to head higher back to the upper end of this range. So far, it's doing it. Volume isn't so impressive. It's taking its time, but so far, that thesis, that trade, that structure around this $81 level is holding in there for XLV. And finally, on the defensive area is staples. Staples are still in a tough spot. I'm not going to gloss over that the longer term trend here is down. Basically, ever since topping out in June, we've kind of been making this series of lower lows and lower highs, but got to respect and got to pay attention to this 2-day move here. This is a very fast move off of this 52.50 area all the way up $1, which is a big move for the XLP. Volume picking up a bit today, so tough spot structurally overall, but I would respect some of this move here. We saw this nice 2-day rally in the XLP. Now, on the downside, this sort of changing of the guard really comes in financials, which are starting to break through some support here and get a little bit sloppy, which we haven't seen in a little while now, in actually a good amount of time. XLF, again, if you look at a weekly chart, it's very much like a blip on the radar. So again, you got to know your time frame and know where you are. But you can see here we had two very tight inside, or almost an inside week between yesterday, but two tight ranged weeks is what I'm trying to say here in the XLF, and we're starting to break below them and resolve lower, and that's why we're getting that thrust downward on some higher volume here. So we are seeing that TLT rally, so we are seeing rates start to fall, financials feeling that pain there as well. So keep an eye on it if you're looking for an opportunity. Some of these individual banks here that have had great runs are consolidating, are holding up well. I'm paying attention to a few of them, so something I would recommend if we do continue to see further pullback here in XLF, but I think you got to be at least a little bit cautious there in the near term. IYT is another spot that continues to get weak here. We were watching it to see if it could kind of hold in around this 176 area. So far, it's been unable to do that. It just continues to sort of slide lower here every day. So until it really kind of changes character and picks up and sees a good reversal, I think you got to be cautious here in the IYT. It's now in the lagging sort of bucket. And biotech, which isn't a new laggard, but it continues to be pretty weak here. Volume's clearly gotten light here over the past couple of weeks, so we'll give it that it's kind of just very quietly kind of basing here at the lows. But again, you want to see it get off these lows. You want to see more, you want to see more bullish bars start coming in here and forming around these lower price levels, around these lower 300 levels to see if we can put a meaningful bottom in. So far, biotech is not really participating here, and it's just staying kind of weak. So something to pay attention to. If we start to break below 310, these were the lows from the past 2 or so weeks. That would be an ugly sort of short-term signal, but if we can kind of base out here and then work ourselves back up above 318, 320, that's the ideal scenario for IBB. So that is everything that I had to cover. Once again, there'll be no Friday video going out, so this is all you're going to hear from me from this week. But hopefully you guys are doing well so far. Thanks so much for watching. Again, do subscribe to our channel if you like these videos. Thanks again, and hope to talk to you again soon.